So if you are trading the pocket option, here is how to use the Keltner channel with the ICT strategy. Okay, with the ICT concept of the fair value gap, and I will show you how to look out for a fair value gap. Just a fair value gap you should be paying attention to. I'm also going to show you a particular strategy that you should be trading with this. Okay, we call it a failed swing of a fair value gap, and I will show you, right? So in the Keltner, you would notice there is an upper band and a lower band. Right, whenever a market crosses the outside band, it's expected to create a gap. All right, I will mark out some of them. There are gaps, the exit and the entrance of a market, and the middle line always has a gap, and those are the gaps you should be paying attention to, right? So I hope this explains it. Right, now let's go into a strategy to trade a failed swing with another block entry, and I'm going to show you. Very simple. I'm on the 30-second chart, just because I want to see the chart move quickly. Normally this works best on the 1 minute chart. So let's see. The failed swing happens when a bullish fair value gap that is supposed to take the market higher fails to do so. Then we enter on the other block that helped with the disrespect of that bullish fair value gap. Listen to that again if you don't understand. Like for example, let's take all right, let's find another block that is about to be disrespected. I think that should be the best way to do this. All right, you notice how this gap here, notice how this fair value gap has been respected, right? So we need to find a fair value gap that has been disrespected. Now we have one. Okay, so check this out. We have a bearish fair value gap. Basically this market is supposed to when it mitigates the fair value gap, it's supposed to take the market lower than here, but you see it was not able to do so. And what happened the market went ahead, disrespected the gap, and made a new high, broke the structure. So all you need to do is to wait for the market to come and tap into this other block, right? Wait for the market to come all the way and tap into this other block. We are not going to pick a trade once it taps into it though. We want to see a change in price delivery. So okay, for example, let's mark this, right? So each time the market comes to touch this other block and offers us a change in price delivery, just like it's about to do right now. A change in price delivery means last this is the last bearish candle. So you want to see a candle break above it, and that will tell you the market is changing delivery. So yours is to wait for the market to come down into the premium, into the discount. Okay, there are lots of this thing. My entry was here. Okay, but my entry was just when the market tapped below the premium. So normally I use the Keltner channel as a premium and a discount range. Okay, so once this happened, you could have entered on the retracement of this other block right here. This was our entry. This was our entry for 2 minutes, and I promise you, you will always be in the money. I hope this helps. If you need more direction on this, let me know. But like I said, you wait for a failed swing to happen. Okay, you find a failed swing here, it will always offer you interest. You found a failed swing, sorry, you had a failed swing here, and the market could not break a new low and ended up making a new high. Okay, when this happens, you notice that this place is now your order block. Wait for market to tap into it and offer you a change in price delivery. Okay, and once that happens, wait for a retracement into that order block, and you got your entry here. You got your entry here or here. You could have entered in of the candle for 2 minutes. You would have ended your trade here or here. So that is the power of change in market delivery. And right, so it offered us another entry, just like we saw this one, another entry here. When the market tapped into the order block, we had a change in price delivery, telling us there are still more orders left, and you enter on the retracement for 1 2 3 4. You would have been out of the trade here, and because you bought below the discount, you will always be on the good side of the market going up. So this is what I wanted to share. I know I rushed a lot of things, and I'm on my mobile phone, so I hope this makes sense. I hope this video makes sense. Please leave a comment below, and I would go live and show you live on my real account how I do this. But this is the best strategy you can work with on pocket option. All right, leave your comment section, leave your thoughts in the comments, and I will make sure to attend to all of it. Thank you,